Good morning, traders. It's 8:02 a.m. Chicago time. On the first trading day of the year, it's January 3rd, 2017. Happy New Year and welcome back. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The markets across the board strong this morning. We're seeing strength in the Asian markets as well as European markets. Um, Of course, the products that are getting crushed are those that are correlated with treasuries and currencies against the dollar. The dollar just made just a new high at 103. The dollar index futures, that is 103.4, up 1.09%. Significant dollar strength here this morning. Um, and crude oil again up 2.5% this morning, trading at $55.06. That's a February crude contract. The treasuries are taking a hit. The bond market's getting crushed a little bit, along with the Japanese yen and the euro. Euro almost nearing parity here at 1.04 against the dollar, down almost 1.5%. What a way to start the year. The rest of the market is, and then the rest of the indices are pushing higher. Now, I did a lot of homework yesterday, and I was going to do this whole thing where we look at the year and so on, and I'm going to try to kind of, it's important for context. I'm going to try to condense it as much as possible. I still want to hold this trader bait to 15 minutes and stay consistent with that. But there are some elements here that you might want to consider in what you're doing, and it's important to look at last year and look at what the market accomplished and what it's trying to do. But the key news today is the strong dollar and the fact that the S&P is up. We settled at 2236 and a quarter. We closed at 2234.75 last Friday. That's the close of the year. And the overnight high is 2255 and a quarter. That puts us at about 20 points higher, 20 points higher in the S&P. It's a significant gap there. And of course, I'm sure some of you heard Bitcoin got over $1,000. If you remember in 2000 and 2014 or 2013, I think it was 2014, 2015. It dropped all the way down to $300. That's not not sure what that's about, but with the bonds getting crushed, just seems like money's moving out of government paper and into everything else. As far as what we're expecting today, we're looking for market manufacturing PMI coming out at 9:45 Eastern. The expectation is 54.2, and in at 10 we have ISM prices paid, expecting 55.5. Since we are at the beginning of the week here, short week, let's look at what we've got this week. The key elements to pay attention to this week, as far as macro releases, is that we have non-farm payrolls on Friday. We get ADP Thursday and non-farm payrolls and unemployment on Friday, as well as factory orders and trade balance. That's the big day of the week. Also, Fed's Lacker and Evans speaking on that day. Tomorrow, we get unemployment in Germany as well as CPI, UK PMI manufacturing. Tomorrow, also U.S. manufacturing PMI, construction spending, and ISM manufacturing. Wednesday, services PMI in Germany and Europe, UK construction PMI, and European CPI. And then Thursday, we get German uh, German construction PMI, UK services PMI, European PPI, and of course ADP, US ADP, PMI, ISM non-manufacturing. So what does that tell us? It's saying that there's a fair amount this week, but the key element this week is the non-farm payrolls on Friday. Not seeing too many speakers on the calendar this week. I guess they're still on vacation or something. But we only have Fed's Evans and Fisher on Friday. Let's move on to the charts. So this morning, what we see here is where we left off last year. The market made a double top at 2060.50 and 2069.50 and has sold off. I did tweet out on Friday, and I was completely wrong. That to look out for a strong bounce mid morning on Friday, and it just we got a bounce that was about 7 or 6 points, but overall sellers were dominant. I should have referred back to the Treasuries to get a clue on that. But overall, the sellers are dominant until the last 15 minutes. You could see in this, the last 15 minutes had some strong volume coming in to buy on this big up bar right here. Wow, this is really hard to draw on. Um, and so overall, the market ended, excuse me one second. Overall, the market ended fairly weak, below mid, below the prior day's range, below the IB on Friday, with the point of control below the IB. Friday was a normal variation day, fairly weak into the year end. The expectation was for a pop higher after selling off over the last few days. Let's take a quick look at the bigger picture. Let's start with the monthly profile, okay? So what I want to do here is show you what we accomplished last year, just so you have some context. And there are some key areas to account for last year. January started out great. Loved trading January, February, March. Things slowed down in April, but you could see January was a very wide-ranging month, with February an inside month, still a fairly wide range for the month. And then March takes off. March starts pushing higher, and it starts this one-time framing up on the monthly time frame into April. Then May breaks that, uh, puts the monthly into neutral, and then June with Brexit breaks the high and the low, also wide ranging, but that only occurred over the 2 days of Brexit. Then from there, July started rallying, but July was had 2, 3 rally days, and then it just sat sideways for most of the month. July was really awful. Just sat up here once we moved away from the Brexit area. Same with August. We just pushed up and held these higher prices and just consolidated all month. Then we started to loosen up in September, dropping a little bit into the election. Again, consolidating in October, and in November, after dropping early on, just before the elections, the market started to take off, and it showed us its full vigor and strength on the bull side, all the way to the all-time highs in December. December, we closed out of value. There's value. Here's value low in December, right here, this green line right here. We closed out of value, and we moved away from the balance we held pretty much the entire month. Keep having to clear my throat, sorry. So uh, December finished strong. It moved away from November, and on the monthly, we're one time framing up. In other words, the stance is bullish on the monthly. On the yearly, the stance is bullish. We have higher lows, higher highs on the yearly. However, on the weekly, we do see some weakness. If we look at this daily MP here chart, you could see that well, let's pull up the weekly and just play with that. Weekly MP, here we go. So you can see on the weekly here, once the second week of December was over, we had an inside week pretty tight trade. And then we broke lower. We have a double top right here. I'm looking out for that, 69.50. Sorry, this is not my usual mouse. I'm on a temporary setup. Oh, oh, oh. Sorry about this. Okay. Well, one of my monitors decided to shut off. Sorry. Hang on. Here we go. It's back. No, it's not. It's back. No, guess not. All right. Okay, so let me switch here and get this fixed. Had to have technical issues today. All right. Oh, man. Okay. Um, where were we? So yeah, so on this weekly, you could see that we have a double top at 69.50. And then what we have here is the market reaching lower and closing near lows. It's nowhere near anything significant yet, but overall, it did show us weakness, and the weekly was started a down one time framing stance. It's neutral to down on the week, and then today, of course, we regained all of that and are reversing it. So when we look at where we are on the daily profile, we have some really interesting areas up here. We have this consolidation up here, then we have a consolidation down here, and then we start this trend down where we have a small consolidation right here, and we're taking that back. We're moving above this latest consolidation, changing our stance for the week. This is showing some strength. The key areas to watch out for uh, today, I'll show them to you on this chart. The key areas to watch out for, we're currently trading at 51 and a quarter. The key areas to look out for are um, the 2255 area is really significant. 2257 is the point of control of this area, and 2255 even is the bottom of this consolidation zone. It's a single print on the profile. It's an area. It's an area that shows that has showed that um, there may be initial resistance here this morning. So what I'm looking out for this morning is the 2254 and a quarter single, and then some pretty strong resistance at 2260 this morning. The expectation is that we're likely to pause in the 2260 area if we push up there. Remember, we're trading at 2251 right now. So if I pull up this chart, you can see the 2260 right here. That's this line right here. You could see how it divides this upper distribution that I just colored in, this distribution right here, from this lower distribution. So my expectation is we're likely to continue to push into that area this morning and then see resistance there, and then start to and have a rotation down on an initial reaction. Beyond 2260, once we get through 2260, we're likely to tackle the double top 2269.50. Which is obvious on this chart right here. The 69.50 double top was were the last two highs tested. There's likely to be a lot above here that's likely to trigger off. The all-time high is 22.73. And that's the next key area. So if we get through 2260, I would lay off the shorts. If you're holding swing shorts, you probably want to buy some insurance or lighten up. Okay. So that's how things are setting up right now. As far as what we're expecting for today, let's take a quick look at the overnight. The overnight's showing significant strength. Volume is back to normal, 176,000, and the trend is higher. We've had almost it's a normal variation day overnight, but The market really started off strong, retested the open, and has pushed higher since. So there's a channel here that has formed. We're at the point of control. We're above VWAP. We're above the mid overnight, and it's still looking strong. It does not look like it has done its exhaustion move yet on the overnight chart. So the expectation is for further highs. The the overnight inventory is obviously long in price and in volume, which means that we're likely to see a small reaction down on the open. So the primary hypothesis for this morning, let me move this here so I can draw on it. The primary hypothesis for this morning is we're expected to open up in this area up here, 22. Sorry, it's not fun when it's not the right setup here. Bear with me a second. Did a lot of testing last night, but it just sure isn't working the way it's supposed to. Okay, so we're at 2251, the 2251 area. I'm waiting for this to catch up. The expectation is for an open auction out of range. I'm looking for a small reaction down into the prior day's range. The limit to the reaction down is expected to be in the 2247 area. And then I'm looking for it to base, and I'm looking for a push towards 2254 quarter, 2255. That's the primary hypothesis. The secondary most likely thing to happen is we don't get that pull down like we've seen multiple times this past year. We keep a gap zone below, a small one, and we start to push up to 2255 and a quarter, take out the overnight high. Statistically, that is a high probability. And then we're likely to base and then continue higher into the 2260 area. Both primary hypotheses are bullish. We do have a big gap below us, and the market is very bullish across the board, and that's the key. That's the key plan to go with today. Okay. So sorry about the technical difficulties, but I'll get it right sooner or later. I head back to Chicago on Friday, and then next Monday everything's back to normal. Hopefully it wasn't too disruptive. But overall, make sure, this is a great time of year to sit down. If you haven't done so, it's really, really important to sit down and look at what you did last year and be honest about your performance and set some goals. Goals, by the way, are pointless unless you put down a plan of tactical steps to take to attain those goals. So saying that you're going to double your return this year or you're going to get positive for the year and that's your goal is kind of like a New Year's resolution. It doesn't really mean anything unless you have small steps and safeguards to keep you on that plan and to keep you focused. So this is the week. By the way, this is the first week of the year. It's likely to be choppy. It's likely to be non-committal, non-directional. So take that into account while you're trading. Okay. I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Take care.